Hi everyone, in this video we will talk to you about trading bots, which will help us without our direct participation to trade, to raise our balance, and close trades in plus for us. In order to go to trading bots, we need to find in the tab tools, Trading Bot. There are 4 different types of bots, namely Futures Bot, Futures Martingale, Spot Grid Bot, and DCA. Let's go through them in order. First, let's go to the DCA Bot tab. DCA Bot is a bot for auto investing. What is it for? Let's say you want to enter Bitcoin, but you don't want to enter it right now. Why? Because there's a chance that its price will rise or fall a lot from the moment we enter it. Bitcoin, like most all cryptocurrencies, is very volatile. That's why it's more profitable to enter it at the weighted average price. Let's say the average in a month. Because let's say Bitcoin is worth 43 right now. Tomorrow, it will be worth 45. The day after tomorrow, it's 41. And so on. We'll enter at the average price. And that's a better way to enter, especially for large amounts of money to invest. So what can we do? For example, we set 1 week. So every week the bot will enter at a certain amount. We set the maximum amount. Let's say it's $1,000. And then we choose how much it goes in at, let's say, 100. So for 10 weeks, the bot will buy $100 worth of Bitcoin and just store it, transfer it to your spot balance, so that later, if you want, you can sell it or continue to carry out some other operations with it, say, add staking or something else. The bot is quite simple. It doesn't have a lot of functionality. It just needs it to be more profitable to invest in large amounts of money. So, if you trade small amounts, you don't need to use the bot. If you trade, let's say, from $1,000, then already to buy some currencies, especially highly volatile, let's say. Bitcoin is also highly volatile, but there are also all sorts of altcoins, which generally jump to crazy some values. You can enter them with DCI bot. Moving on. The next bot is a spot grid bot, the most common bot. This is, in fact, an imitation of the most common trading that you all know. We buy cheaper, we sell more expensive. We buy cheaper, we sell more expensive. On the left, here are those bots that were launched by other users. Parameters recommended. There are also artificial intelligence strategies. This is from Bybit itself. Recommended parameters for the bot. However, in fact, it is not artificial intelligence. It is just the parameters that it sets itself. That is, no neural network does this. This is done by people on Bybit in semi-automatics. And there's a manual setting. There's AI strategy and there's manual. Why is manual better? Because you can copy the settings of the artificial intelligence. Let's say you click AI strategy, they are entered here, and you can adjust them somehow to suit yourself. For example, personally, I think that the best option for each trade to give you about 1% of profit, that is, the less we have grids. This is the grid parameter. The more for each trade we will feel profit or loss. What are grids? This is the number of transactions simultaneously, which are, that is, let's say, the bot buys Bitcoin for 42,000, waiting for it to grow. If Bitcoin falls, he buys more, gives another deal to buy and sell, and so on. It turns out the maximum will be 28. He will make a maximum of 28 transactions. Then, when Bitcoin will grow, he will sell it. We'll close these transactions in the plus. Here, respectively, we set the number of grids. It is better to take about 1% of this amount. Well, rather, not even about 1%, but the highest value. To be 1%. So you do not risk too much, and at the same time, each transaction will be felt. We'll change your balance. You will be pleased to come in and see what is happening. Fill in. Enter the amount of investment. Here, for example, according to these parameters, the minimum investment amount will be 205. The more grids we have, the less the amount is available. The more grids, the more money you will trade. For more trades to create simultaneously, the more you need to have your balance. Enter the value, click Create Now. Also at the bottom, there is a tab, Advanced Settings. Here you can set your stop-loss value, at what value of Bitcoin the bot will stop its work. Take profit. At what value of Bitcoin it will close all trades in. Plus, and you will fix your profit and entry price. That is at what amount of Bitcoin value to start trading. Let's say you are waiting for some kind of fall, and only after this resistance level, let's say, reaches entry price cannot be used, and at the stop loss take profit can always be set to those values that you consider acceptable. I always advise you to put a stop loss in all transactions because it will help you get rid of unintentional spending. Losses, or rather unintentional losses. Protect yourself. Then, there is a futures Martingale. This bot I do not advise beginners to use at all. Why? How does it work? First of all, you need to understand how futures work. So let me start explaining it to you first with an ordinary futures bot. In futures, you trade not the currency itself, but futures contracts for this currency. Thus, it allows you to trade not only in plus, but also in minus. That is, not only long, but also short. You can make money not only when the price of Bitcoin goes up, but also when it goes down. You sell, you borrow crypto from the exchange. You sell it, and when the price drops, the bot buys it back and returns it at a lower price. That's the difference that you get back as earnings. This strategy is called shorting. Longing strategy is the most common strategy, where you buy cheaper, sell more expensive, and neutral strategy, where the bot will create. It is the most profitable strategy in my opinion, especially if you take into account that now the market is very volatile. It is always storming up and down. And for futures, it's probably better to use not Bitcoin, not some kind of, fundamental crypto, but altcoins. Because they are cheaper, there will be more trades. And the more trades in futures trading, the better for us. So let's choose some coin, for example, Solana. It's good, stable, and yet it's quite strong. We choose a neutral strategy. We also do manual AI strategies. Everything adds here. Here the trades are too few, let's raise the value. Or rather, first, let's even understand leverage with you. What is it? Leverage will allow you to increase the amount of money you are trading. So you leverage 3, you will trade not for $100, if you have it, but for $300. What are the risks? To lose your money, if you don't have leverage, the cryptocurrency has to conditionally drop 100%, right? 100% crosses the line. In the case of a neutral strategy, let's say you have a lot of purchases in long. If the crypto falls, 100% short. If it grows by 100%. And with leverage, this percentage is reduced by this value. So it will be somewhere around 30. That is, you created transactions. 30% of your open orders, the amount deviated. You caught a liquidation. What does that mean? The exchange purposefully closes all trades, your balance is burned up. That is, it returns the borrowed funds to itself. I do not recommend using it. If you are a beginner, if you are already more or less mastered, set yourself leverage. It's better to have 3 in general, and 3 to be the maximum. Well, only if it's not some currency that you are super confident in. For example, XRP, yes, which has been there for 6 or 7 years. And so, with leverage, you will get more tangible deals, so we remove it. Here we set the same values I mentioned. That is, we come to 1% approximately. Here, let's say, not bad values, yes. Take a neutral strategy, copy it, leave the values here. Enter the investment amount, click Create Now. Here we have the same thing. To stop the bot from trading if these values are exceeded, or rather, it should be less than these values, let's say, yes. To narrow the range. Although, in principle, nothing prevents you from doing the same thing here. And I don't quite understand what these 2 different things are for. And the last bot that we have is a futures Martingale. What's the difference? It will increase the amount of trades. So you put it, let's say, in long. There is no neutral strategy. You put it in long, it bought crypto. The price starts to fall, the bot takes a loss. The price falls to a certain value. It buys twice as much as it was. If it continues to fall, it doubles the amount. In this way, it increases the volume of trades so that when the trend turns around, it will go up. You will more quickly recoup what you lost and come to a more tangible plus. Is it good? Frankly speaking, I think not. Because it is a very risky thing, volatility is strong. It happens that the crypto flies away by some 50%, even more. Therefore, the belt is highly recommended. If suddenly you still decide for some reason to use it, also do it manually. Put the lowest possible price increase. Here is the 10th only in percent, but in whole he 10th percent, without leverage necessarily. That is the maximum, or rather minimum, and minimum values. Exactly the same. Insert the amount, click create now, the bot will be launched. 3 of them I recommend to use. The safest is DCA for investments. The safest is also the usual continuous grid bot. A little bit more dangerous is the usual futures grid bot. On a neutral strategy, however, I advise you to do without leverage. Summing up, and the last bot is a futures Martingale. I do not recommend using it, even if you are very experienced. There are huge risks to lose everything, but also huge risks to earn, of course. When the trend turns and let's say the bull starts, you had a lot of purchased on Martingale on the lows, you will get a huge amount of profit. But it's not worth it, you can believe me. That's basically all. Subscribe to the channel. I hope this video was useful for you. Waiting for you. For more videos,